Man, wrap that timer up. Good morning, traders, and welcome to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we've got a killer episode in store for you guys. We have the one and only Nilabh, one of our co-founders, here joining us today. We're going to break down some fundamentals, explain to you why gold is selling off, even though we have geopolitical tensions, and so much more. And we also have initial jobless claims today, guys. So run that like button up because Market in the Morning starts right now. Yo, Nilabh, good morning, bro.
Good morning, Kevin. How are you?
Dude, I'm doing good, man. Thursday already?
This week's flying by, man.
Bro,
I'm just excited for it to be over, dude. I'm going on vacation end of this week.
Oh, okay. Anywhere cool? Where are we going?
I'm going to Italy for a week and a bit, about almost 2 weeks. So it'll be a good time. Maybe I'll do a Market in the Morning from out there.
That'd be cool, bro. There we go.
Yeah. Hope you've been good. It's already Thursday. There's been so much that's gone on in the market. It feels like these weeks are just going faster and faster, doesn't it? There's so much that happens, right? There's like 5 years of geopolitical stuff happens in a week, and you're just like, what did we just go through?
No joke. I'll pull up your chart. Let's break down what's going on.
Let's do it, man. And I liked how you got it off. You're like, hey, gold's supposed to be going up, guys. And people are wondering that, right?
Yeah.
People are wondering what is happening to gold. And to make it even easier to understand, I've pulled up the crude oil futures chart over here, right? So we can see that out of everything, crude oil and US dollar have been the one that have been performing the best in this environment. And then other markets such as S&P, you've seen just slow corrections as institutions cover their bets. On gold as well, you have seen massive outflows from the top where the war was priced in, just about over here. And then we saw lots of outflows to better buy price areas to around 4,100. And Kevin and I were talking about 4,200 weeks ago. We mentioned that, hey guys, even if gold was to come down to this area, we're still very bullish. Like, this doesn't change gold's trajectory on its higher time frame basis. Since the dawn of time, it doesn't change, right? We know this is an appreciating asset. It's going to continue to appreciate. This is just speculative movements of the war being priced in, and as well as any geopolitical tensions in this case are causing outflows in gold, and any relief rallies or any signs of optimism on the war is causing relief over here. So we'll break that down on why exactly that's happening in this case versus cases of such as Russia, Ukraine, where you saw gold really go up into the 2000s during those times, and really push into the higher limits of it. So, but on the other hand, crude oil, on any slight escalation, spikes, and on any resolution or any optimism on the war, you see these bearish retracements. And easiest way to figure that out is, let me go to market. I'm going to open up backtest fundamentals over here. Oh, sorry, I clicked on the completely wrong one. Open up backtest fundamentals. We can go to CLUSD. And if we just click this candle, guys, it'll tell us why this massive candle from $100 an ounce down to $85, $84 an ounce. And I'm sure this was a move that probably happened in a minute. Well, it's a minute candle, but this was something that probably happened in like 20 milliseconds, where you have a massive play, just things like this are happening, and then boom, in 6 minutes, you see oil collapse about 20%. So why does that happen, right? So Trump announces a 5-day pause on Iran military strikes, signaling diplomatic breakthrough. So you can see the exact time the headlines came in.
Could you zoom in on your chart a little
absolutely,
bit?
Absolutely. Thank you. Is that better?
Yeah, a little bit.
So you can see how absolutely the headlines came in, and then you see this lower time frame retracement. You see this massive downside move, and then what ends up happening is that the markets go into almost a state of, hey, we're not going to do anything right now. And the reason we're not going to do anything is because we don't know how true this pause is. As we know, Trump isn't one of those guys who says something and then follows through to it till the very end. He's going to play around with it. He's going to negotiate. It's a tactic, and he's just going to be himself. That's why they call it the taco trade, right? Trump says something for the tariffs and then completely walks it back. So it's the same thing here. Any sign of optimism, we're not going to take it blindly and be like, oh, the war's over. It's not. You have to see it through. And what ends up happening is that the markets, in certain markets, go into almost like a state of paralysis where they don't know what to do. And you see consolidation really take place. However, that's not so true on crude oil, because crude oil is very crucial in this war. You see all these energy infrastructure being hit. U.S. has to protect their assets in the Middle East, right? So they're going to defend. Iran is going to Iran said it. Iran said we'll attack energy infrastructure in the Middle East if you guys continue this. So you can see the tensions that are adding weight to the price of crude oil. And this retracement came down to a perfect liquidity area. And since then, you can see that markets leveled off. We tested this buy zone at 84, 86 several times, and we now continue to push above 90s. So, but on ES, if you look at ES, why did we not do that? We had that initial push up over here, the same thing, the taco move right over here. And then we see markets start to range. And this ranging is going to go on until we get some further insights on whether what Trump said was going to hold more weight and it's going to continue from an escalation point of view, or will we continue to escalate and then ES continues to drop, right? So we're in that area where institutions aren't really looking to pull money in on either side of the market, because you just got one statement that caused this move, and now we had nothing to really, we've had things on both sides. War's cooling off, war's not cooling off. So you can see that also being reflected in the market conditions over here as well.
Yep. I've got a question in the chat about what is your expectations today on the U.S. indices depending on the results. So we do have initial jobless claims in a couple minutes here.
Yep. So we'll quickly go over that.
Yeah.
But just to cover it, what is seeing the most gains is U.S. dollar, because U.S. dollar is a safe haven. You see crude oil, because crude oil is very crucial in this war. And then we have seen S&P just take a nosedive. We've called a lot of these sell plays out on the intraday levels. And we are continuing to monitor the situation, as well as gold is seeing more bearish price action. But I do think gold can rally a bit off this optimism heading back to these highs at potentially 46.50. So we'll go into that, but we got a few minutes to break down some very important data. We got initial jobless claims coming up in just a matter of a few minutes. This happens every Thursday, so it doesn't hold much weight unless you get a surprise reading. And that surprise reading should be if it exceeds either the minimum expectation or the maximum expectation. So we're forecasting, the banks are forecasting, the top banks are forecasting initial jobless claim to come out at $10,000 jobs claim initial. Prior was 205, so that's also the minimum in this case, and maximum 250. So looking at a bit of a tight range. Right? If we look at historically, if I click the brain icon over here to get more analysis, I can see that initial jobless claims, it's happening in a minute, key input for central bank rate decisions, right? Anything above these numbers is going to result in a bearish and a very bearish dollar. So that would have an opposite impact on gold. And if we're looking at below, if we look at very bullish and bullish readings, you have to be like 212, 210. Right. So and below the minimum as well. So we'll be watching and seeing how this plays out. And we got 32 seconds. Besides that, we don't have much coming out right now. The majority of the data is also, we have Michigan sentiment, which is important, but that's tomorrow. So we'll leave that tomorrow, and that's later on in the session around 10 a.m.
Yeah. Yeah, nothing else major. I think we have CPI next
week.
No, following.
April 10th, I think.
Yeah, April 10th CPI. What else we got? So yeah, real quick, guys, on the higher claims, they also had a question in market. We see the impact on USD, but not the impact on indices.
We got it at so that's actually something we're adding, and I'm very glad you brought that up. We'll go right into that question, but let's look at this data real quick. So it came out at 210. It came out right on forecast. So we're not going to expect too much out of the markets, right? It's above prior, but it's still on the forecast, the increase that markets were expecting. So you can see like minimal movements, right? There's not much. We'll watch. I think dollar is just going to continue its trajectory towards the upside.
Yeah.
Dollar has room to go back to these highs at 100.4, and then even higher. Like dollar can still head up into 101.5. Right? It's maintaining its healthy bullish movement, right? Crude oil is also maintaining its healthy bullish structure. And then on the other hand, we're on a bit of a kind of like a hold because investors aren't really pooling money in on either side. There is greater upside risk to the war where ES can continue to trickle down than there is any hopes of optimism. My opinion, this is not going to be much. This is just classic manipulation. Stock markets come here, boom. Trump says something, and you see algorithms trigger. Because this isn't humans trading, guys. This is purely algorithmic. When we click that candle, you can see that this came in exactly at 7:09 a.m. You can't trade on this if you're a human. 7:05, Trump on Iran. U.S. and Iran have, over the last 2 days, very good talks. 11:05. That's purely algorithmic driven move.
Yeah.
So to go back to that question, why we don't have for US indices or anything else, is actually coming up very soon. Is we are making a system where what you trade, what any user trades, we will have a playbook for it. If the market that you trade is not impacted by this asset class or by this economic event, then you're not going to see it. You'll only see it if let's say in this case US indices, when that feature is released, you'll click a drop down, you'll see a US indices playbook for it. So that is coming up. What we like to do is we really like to deploy our features when they're built 70% and then wait for feedback from our users, because that's what's truly important, right? How you guys end up using it. That's exactly what we did with this calendar. We shipped it. A lot of people gave us feedback in the first 48 hours and the preceding weeks, and then we updated it based on that. And that's one of the feedback we got as well, is that, hey, could we get playbooks for other things as well? Of course. So we're going to get you those. It's coming in the first month of Q2. So
Nice.
in April, in a few weeks, we'll be releasing that as well.
Sweet. Something I just want to touch on gold real quick on the chart. Guys, gold just hit, when we're 20% off of all-time highs on markets, things like the S&P, NASDAQ, gold, not necessarily individual companies like Apple and Microsoft. It's considered a bearish market. Now, for gold to stay below 4,500, that's below our 20% from all-time highs. That's putting gold in a bearish market, but we have to look at it from an investor standpoint. It's not that it can't go any lower. Of course it can go lower. Markets can do whatever they want. They're not rational. But gold has very rarely in the past had dips below 20% that lasted long. This was only 12%. This right here, 18%. It's hard to find. I think there was one. Here we go. Here's a
Right
big
there.
sell-off.
That's the one. Yeah.
30%, right? 30%. Almost probably 45 if you really measure
the GFC taper tantrum back in 08 to like 2013.
Let's see. 08. Here's 08 to 09. That we get a nice pullback there. Just hitting 20%. But it really seems like that 20% to 30% is that sweet spot for gold. And again, in a long-term investor standpoint, you know, you buy somewhere down here, you're looking at least a 28% return on investment.
And that's massive.
That's huge.
Massive. That's massive. So there's no timeline of it, right? Like what Kevin's mentioning is purely the number aspect of it. Like, hey guys, this is a massive discount. It doesn't, the structure that you see in front of you does not dictate or does not decide the value of it, right? That's one thing you have to keep in mind, is that if you see this intraday bearish structure, right? And even market has been calling gold for intraday bears since yesterday at noon, because despite us seeing this bearish structure does not indicate that gold will not continue to increase in value, right? It is still a very much a discounted price for a globally traded asset class. And exactly like I mentioned, 20% is quite a lot for in such a short period of time as well. So it's not possible that we'll continue to see upside, but it's going to come in waves, right? Things like this come in waves. And what that's great is that we're able to take more advantage because there's not excess volatility causing us to hesitate or causing emotions to come up. Is when market structure is very clean and slow. Like in this case, market structure is clean, it's moving a bit slower. You're given time to execute entries and whatnot, right?
Yep.
Did we just have a chat come up? Sorry.
Yeah, no, that's okay. Welcome had an idea. Also a priced in section.
Yes, sir. So, okay, the chat's on fire today, man. So this is currently being worked on as well. Is that we're going to let you know, because we are redoing our entire high impact headlines workflows. And what it's going to do is going to be more accurate. You're going to see charts attached to these high impact headlines with the actual movement that happened. If the movement didn't happen, it's not going to be a high impact headline. So we're going to actually show you the proof behind the market movement. And it's also going to let you know whether a headline, if it came out, whether it's priced in or not, right? So you're able to tell, oh, this isn't as important as something that's in focus. So amazing feedback from the chat today. Thank you so much, guys.
Awesome, man. Awesome. I'm excited to see that. Always cooking something good up in market.
Oh, and we got something coming out today too. We are just full of it. We got so because all these escalations, as you guys have seen, have happened over the weekend, right? Like this massive gap that you see towards the upside is because markets, the war started on the weekend. They sent the strikes, and then boom, markets open up. So we actually added a hyperliquid feeds to market. So you'll be able to check on commodity futures. You'll be able to check on perpetual contracts, on crypto, all these on-chain contracts that Hyperliquid has crafted, you'll be able to check on market as well, starting tonight or potentially tomorrow. But we're looking to get that out for you guys. So anybody, if you're over the weekend, because I know, listen, I like to be on like just doing work on the weekends, right? So if I can check what's happening on oil, see if any headlines have impacted it while it's a Saturday or Sunday, of course I'm going to take advantage of that. Check market, check the Hyperliquid feeds, and stay informed. So we'll see. You guys will see that come out shortly. And just jumping right back to so much coming out, man. It makes me so excited. We also have. I'm just throwing shit out now. We also have an app, by the way. It's going to be coming out in about a month and a half. It's going to start off as just the basics of it, where we have a news feed and you're able to customize the alerts you want. But guys, this quarter we are taking it up a notch. What you have seen so far is we have not reached our max potential, and we are just going to keep elevating, escalating, and just building the best product possible for you guys.
Bro, let's go. Guys, drop some W's in the chat. Absolutely killer. And guys, if you guys ever have any ideas or anything you want to see on the platform too, just like Mr. Welcome was doing, drop it in the chat. Always open to feedback.
Yeah, always open to it. We just got a headline that came out, says U.S. weekly jobless claims increased slightly. As you guys know, we said that there was no surprise over here. Like, this was just a very boring reading. Exactly what Market AI said to you. U.S. weekly jobless claims increased slightly is routine data with no mention of surprise or deviation from expectation. So more muted reactions. As you can see, dollar has done absolutely nothing since the data report. Same with ES, not much movement, and same with gold. So gold, right now on intraday, if we look at it, we are seeing that bullish structure form after seeing massive liquidations all the way down to 4,100. That also being that 20% that Kevin's talking about. Yes, we can make our way down here, retest this area again. And that, or if we start to continue towards the upside, then you now have a clear pathway back to 4,600, back to these highs. If we were to break out of this little minor consolidation, we'll see how price reacts, retests it. Otherwise, we can still dig deeper into some of these areas, like right here or just down here in general, which would still make gold more bullish.
Yep. Awesome. I got one more question. What about the sauce coming for the market OGs?
So this is something that we are having talks of internally, is that for our OG users, and very soon we're going to give them, they're going to have almost access to like a loyalty group. For those users who have been a part of us with market from the day one, or like say month 2, you guys are going to get, we're going to give you perks. We're going to give you exclusive features that are going to come to you first, that you guys are going to get the test on. You're going to get to tell us initial feedback before we push it out to the 99% or 98% of the other users, right? It's also going to come with the top users. We're introducing a system where you'll be able to we'll be able to see who uses it the most, and they're going to get like quarterly perks as well from the company, just as a token of our appreciation, because you guys are people we appreciate a lot, and you have really shaped the vision of the product as we've continued to develop it, and it's as time has gone by. I can't mention too much. There's a ton more regarding that, but I'm gonna keep my mouth shut. Well, we can go talk more about features as well, because that is coming up much sooner. I'm very excited for the app, because a lot of people came to us. They're like, Nilabh, I want to be able to receive notifications when I'm not at home, when I'm not on the chart. I'm like, you know what? Very valid. A lot of people, some retail traders, they'll be commuting, right? They'll be commuting to their job, or they'll be in a meeting and they're not able to always check. So it makes perfect sense. We'll add it to the phone, and the first version will just be the news feed.
And you know what? Something to point out, bless you. Something to point out with us having an app and us creating that news feed so you get notifications. Let's say you get that notification the other day when Trump mentions about the de-escalation or the ceasefire, or what did he mention at like 7 in the morning?
7:05 a.m. Eastern.
like boom, you get that market notification. You're way ahead of everybody else who doesn't have that. You're able to hit the computer, see the move happening. You could even jump in, right? Because that's how quick these headlines are hitting the market servers.
Yeah, exactly. It's and that's why you also hear is that Wall Street, like the top firms, algorithmic trading, that's like they're closest to these
Yeah.
data exchanges. Like you
Yeah.
have it's not only it's a game of speed. So as soon as this information comes out, guess who's executing on it instantly? It's the algorithms. Like if we were to go over here and go to the 1 second chart, let's just make that a quick exercise to really see the speed at what we're talking about. So this is oil. Right now we're on the 15 minute. I think I can replay lower than this, right, Kevin?
Can you? Oh yeah, look at that.
I can. So this is the 5 second. Hopefully we can go down to the 1 second. That would
1
really
second.
be cracked right now. Yes, there it
Not
is.
that
Okay.
fast.
So this is a 1 second chart on oil. Right here is 7:05 a.m. and 15 seconds. That's the exact time the headline dropped. Algorithms. Like this is all about all the data. And let me parse it let me parse it. As a human, it's gonna take time for you to register. This is a very high impact headline, or you look at market and that this was a high impact headline, right? So when that comes out, algorithms are already selling off. And already within 4 seconds, you see crude drop from basically 99 to 96. And then within another few seconds, within less than 100 seconds, we're at 89. You've already dropped 10% in less than a minute, right? So this is what I'm talking about is when these headlines come out, it's not, oh, everybody in the world is now digesting it. No, the algorithms have
Right.
started to move. So it's very rare you're going to catch something like that. But what you can take advantage of is, hey, when I go to market, I go to crude. Crude is still bullish. Crude is bullish because the Strait of Hormuz remains closed. We're getting all these headlines that are contributing to this bias factor. We get more attacks happening, escalations. So we know that long term, that this is basically another one of those taco moves that Trump does. So boom, perfect tapped into this. You see actively over the next day and a bit where market tries to go below that area. We see more buyers jump in down from 86, right? This is your second sign of buying that's taking place over here. You're now seeing, oh, we're still consolidating. Any dips? Oh, another dip from an optimism headline. And now you continue to see this area hold off. So you're like, you know what? There's buyers accumulating. There's orders here because tensions aren't really going away. The market's also giving you that, okay, our upside target remains 96. Even right now, if we pull back to 92, even 90s, we're still bullish on oil, right? Even if we got a headline that came out and it caused some sort of movement like this, that's still bullish. Like that's just a better buy price, just how Kevin was bringing to example on gold, that we're at a 20% discount, guys. Right? You're looking at gold being worth 6,000 plus in the coming decade. You think this isn't a crazy discount price where if you take it from here, draw it up to 6,000, that's a 37% gain? Do you know how much 37% is on $1 billion? It's a shit ton of money. Let me tell you that. That's what you got to think about it. Not with your, you know what I mean? Not with our smaller accounts. Like it's institutions are looking at a 20% gain.
Yep.
And they're rubbing their hands together. They're like, wow, this is an opportunity of a lifetime.
It's funny. It's funny too. You ever see the meme where it's like people are lining up to buy Nvidia over 200, and then
no one wants to buy it at 80?
Yeah, right. That's what's going on with gold right now.
That's what's going on with gold. People were pooling into gold at 5,400, at 5,300 US dollars an ounce, but no one wants to buy it at 4,000.
I would say gold.
Human nature's it's crazy, dude. Like how it plays out, right?
Yeah, guys, it's gonna be big. It's gonna be big. Don't want to be buying highs. We want to buy lows.
You want to buy lows, yeah. You want to protect your downside. Because if you don't, it's very easy to get up. Is Iran war already priced into the upcoming CPI?
It's a great question. We're probably going to see an impact. I don't think it's going to be like, boom, CPI is at 7% now. I don't think it's going to be that quick. But high oil prices, high gas prices, that does impact inflation. And we have now been going through that for a few weeks now. It's been long enough. We'll probably see an increase. You want to pull up the economic calendar and we'll
Yeah.
take a look at the
Well, we saw
CPI?
an increase on PPI, right? Like you saw
Yeah,
PPI
PPI went up,
go up. So
surprisingly.
it's like producers passing those costs down to consumers, anyways.
Yeah.
So we'll see that trickle down, right? It trickles down into the economy.
Let's see. CPI. Yeah, guys, got to remember, when we have the first week or two of a month, that's when we get most of our economic data. Non-farm payroll, unemployment, CPI. So we're coming into that. It's the end of March now. We're going into April next week. Let's see. Here, I pulled up CPI.
Okay, cool. I'll share yours.
Let's see. Perfect. All right, so CPI we have on, what did we say, April 10th? Right over here, April 10th, Friday. It's a good day. It's my birthday, guys. Put that in your calendar.
Oh yeah?
Oh yeah. We'll do a special episode of Market in the Morning that day for
Hell
CPI.
yeah, man.
Yes, sir.
Absolutely. We'll have a
year
cake
over
delivered
year.
live.
Yeah. All right. Key input for central bank rate decisions, signals overall economic strength and trends. High impact released often moves currencies on surprise. So we will be looking for that surprise coming up for CPI.
Yeah.
I believe it's actually this one we need.
That's core CPI, yeah. So the one you're looking at is the right one, yeah.
Oh, the CPI, not core?
Yeah, that's the header. Yeah.
Core has in focus.
Oh, we're not seeing any movement on the markets today. This week have just remained like muted, huh?
Yeah.
It's been like it's been one of those weeks where you just really have to exercise the patience.
Yeah, no joke.
And then that's how it's been, honestly, like past few weeks. It's been like you really have to pick and choose your battles in the markets, right?
Yep.
More than ever before, in my opinion.
Yeah. Guys, something I like to do every morning too is run through the headlines, right? Go to your news feed, hit high impact. And because we know what's really moving markets right now, things with Iran, things of war, we could search up those keywords and filter out the high impact filter for us and say, okay, is there anything news related on Iran that could possibly increase us to the upside or downside right now? See, an hour ago, Iran war erases global growth upgrade. What else we got? Israel military spokesperson. Our mission right now is to further degrade Iran's capabilities. Here we go. Trump, Iranian negotiators better get serious soon before it is too late.
You see what I mean? It's just a back and forth. It is pure theatrics. They know what they're gonna do. They're gonna continue this war, and we know all I really care about is how it impacts the markets.
That's right. How markets are pricing it in. Again, forward looking. If they say anything with optimism, we know we're going to be bullish, right? He came out with the ceasefire headline. Markets went crazy to the buy side.
Yeah, exactly. We'll continue to be bullish. So, but in the meantime, like you can really see it reflected in ES's chart. Like it's just indecision. Market investors are sitting on the sidelines. They're like, hey, we rather not be in here with billions of dollars while this guy is just going to say he's going to flip a coin and say the other thing.
Right. This is how we've been, guys. We've been in a beautiful downtrend with the uncertainty, with the bad headlines, with war going on, with oil moving higher. Then we had that one headline, ceasefire. Boom, markets reversed about 3%. But we still haven't taken out any major highs, right? We haven't made that higher high yet. We are still making some lower lows on our way there. And at this point, we're just within that range that we created on that day with the news. So that's sort of where we're at, in my opinion. Without any follow through, we're just going to end up finding our way back where we started down here.
Yeah, exactly. Exactly. Down there, maybe even lower, right? Given any sort of escalation comes in, then we go deeper to like 6,300 or 6,400. So it's like you see nothing changed. It was just in that moment. You get that sort of candle movement. You get that price fluctuation algorithms just trading off of the headline, the words that Trump just said. And it's like even here, if we let's look at the 1 second chart here. It was the same thing. Like It started. Oops, am I in the wrong one right now?
No, MES, 1 second. Yeah, we're good.
Okay, yeah. Like right here, right?
Yeah.
And we just surged. Like it was a complete surge, and then it got faded. It got faded out.
Yep.
So it's nothing changes. Trump is just being Trump. We don't take anything seriously. Use your own judgment in this case, right? Or look at market. And this is where that price in feature we're building is going to be very useful because it's something. Then if Trump says anything else related to that, then you know it's already priced in. Like it got priced in right here. Now we're in that period of just like straight indecision.
That's right, guys. A good way to view priced in information is information that's already been made to the public. If people know we're expecting a ceasefire, know we're expecting rate cuts, these are economic factors that are priced in as soon as it's made public, not when it happens, when it's announced.
Exactly. Yeah. Because if something gets announced and it's not public information, that's when it's taken as a surprise.
Yep, exactly. When it's like out of nowhere, boom, hey, you know what? Ceasefire, war's ended. We just came up with a plan. Both sides signed out of the blue. That's new. That's going to impact markets. If he
Yeah.
just announced the ceasefire and then they slowly make their way to it, we might see chop, but that's markets pricing it in.
Yeah, exactly.
Is there possibility to add a surprise headline in the high impacts for something new that hasn't already been announced or priced in?
Yeah. So if like let's say you get a headline and it has massive movements, like that's clearly a surprise, right? So it's kind of the same thing as marking something off as a true high impact headline in our new updates, where you have the price movement that actually took place and it was significant enough. So it's a surprise. So inherently it's like a surprise headline, right?
Yep, exactly. That's cool. That's cool. And I would think too, right? We're gonna probably set up. I love the filters we have on our headlines right now
Yeah.
too. You want to cover the filters a little bit?
Yeah, I'll pull up your screen if you like.
Sure. Let's see, there we go.
Oh, was that me? Sorry.
No, that was me. I think I hit the wrong button. All right, there we go. So filters wise, guys, you can come over here to filters. You could even do it on your dashboard too. And you can choose if you don't, let's say central banks, I want the Fed, I want US data, I want tariffs, US politics, geopolitical risks, US stocks. You could choose what you want in your news feed there. That way you don't get all Euro, all Bank of Japan, all Bank of England. You're filtering it out even further. Nilabh, I did have a question for you. If I
Absolutely.
turned off the filters, let's say we didn't choose any filters, but we came down to ES and NQ. If I just check those, would it still give me all of the headlines that impact these two assets?
Yeah, so it'll give you those headlines that impact those assets. Yeah.
That's awesome.
Yeah.
Very cool. Very cool. How do you, Nilabh, give us some input. How do you like to use market? How
For
do you
sure.
use
Let me
any
pull it up.
filters? What do you like?
Yeah, no, I don't put on any filters on my feed. Dude, when I say I'm on my desk all the time, I'm literally here every single hour of the day or I'm at the gym. So for me, it's very normal where you see I have my trading view charts open. I have a monitor on this side and I have a monitor in front of me. On this one, like I'll either keep like my MT5 open or I'll keep a trading view chart just open while I'm doing work. I have market on the side. In one case, I love to just have the news feed tab completely open. And the other one, I'll keep like the home view or the calendar open. So the home view, what I do is like when I come to the markets in the morning, like I wake up, I'm an intraday trader. So I'll go to gold, right? I'll look at what gold price levels are. If anything happened overnight, it's very easy to come down here to check. Like even if I go on like oil, I see, okay, so these headlines added to this, right? Did something new happen? Oh, 2 hours ago, there's talks, right? You know what I mean? So
Yep.
well, I'll scroll through that. I'll look at what the headline says over here for anything that happened overnight. Look at price levels and really look to then do my technical analysis and see how I can position myself, right? In this case, if I go here, I go to gold. Gold is slightly bearish, and we've seen that like gold came down to this 44.20 price target that market has had. So we still have a possibility of gold pushing a bit lower, given the fact that we've had no further relief from this initial headline that Trump set. But however, we know that if we push a bit lower, we can still get some buy bounces. So
Yeah.
I'm aware of the bias that we can potentially play out for this session, but I'm also vigilant enough to know that, hey, if we come down to any of these lower prices, we could get a potential buy that could align with the bullish bias, slightly bullish bias that exists on the swing environment, right? So that's what I pay attention to. And even now, like if data comes out sometimes, I don't even keep the economic calendar open because those same headlines will now come in on the news feed as well. So you
There we
can
go.
click the economic data tab and you can see all the news feed here.
Oh, that's new.
You
We
can
don't
see,
have that yet. They don't have it yet.
yeah. Excuse me. It's coming, guys. That's what I mean. I'm just giving you a little sneak peek that there's some exclusive features on the in the work. So things like this, if I click initial jobless claims playbook, boom, I got a playbook. So you don't have to have the calendar open at all times. It will directly come in straight into the newsfeed. As you can see, here it is: continuous jobless claims, high impact, right? And then you can just click this icon over here, boom, open up the playbook for it.
Looks good. Does market success change your view on how to see the money now? Do you mean how to see the money
My
now? Like,
my view on money got changed when I first got exposed to trading when I was 18 years old. And since then, I always saw people because you always see the top, like social media amplifies
yep.
what you see. So if you see somebody, you're most likely going to see the richest of the richest in the niche that you're trying to make it in. So while the 98% are absolutely losing money and trying to put two dimes together, the 2% or the 1% at the top is making so much money, and that's all that gets shown. So since then, my perception on money was always a bit more flawed. And I knew what was possible and how much you could make in, let's say, a day. And while most people focused on, let's say, 100,000 a year, I want to hit that. I was like, I've seen people, I know people at that point when I was 18, 19 doing that in a month. So since then, I was like, hey, you know what? It didn't take market success to change my view of money. It was just from, I think, from when I first got exposed to trading, where I kind of became like numb to it. Where, Kevin, you know this, like you have $100 day, you feel the happiest. You have $1,000 day and you're craving a $10,000 day. That happiness fades, right? It fades. It becomes purely mechanical. Feels like a numbers game. Then you have a $10,000 day. You're like, fuck, man. Why isn't this a 20K day?
Yeah, no, it's funny. Everything's all in life, not even just trading. It's all perspective, right? You might have a break-even day, but still be up 500, but usually be averaging 5,000 and think that was a bad day. Whereas a new trader would kill for a
kill to be in that
$500
position. Yeah.
Yeah. So
yeah. It even gets reflected in your trading. Like, think about it. Now, before, if you were ever up $500, you take it, and now you're like, hey, my take profit is $3,000. Why would I take this 500? Because you just level up, right? You become more numb to these numbers as they increase, and you also become more confident in your ability to make even more.
Yep. Yeah, absolutely. And that's why also you want to start small, right? Don't jump on a prop firm and be like, I'm going to risk $1,000 a trade. If you're still a newer trader, being read like $500 without hitting stop loss, you're going to be freaking out. Do some size down, size appropriately so that you're not stopping out all the time, and you could take the fundamentals for what they are and execute properly, not 4,000 paper cuts in between.
Yeah. Exactly.
Guys, I want to leave you guys with a quick little trade setup before we wrap up today's episode. On the S&P, seeing how range bound we've been. A lot of times when we're range bound like this, we see these intraday moves are also very range bound. Now, yesterday during the New York session, it looked like a lot of nothing, but it actually gave a couple nice setups. I took this short position off of this high after we swept this high. I took it short and I targeted the low. But look at how we're reacting whenever we break pivots lately. So that's exactly what we're going to be looking for going forward. If we could break this pivot we created on Tuesday and come into this big area, this is the area we created that large pump from, I'd like to see if buyers can step in right in this zone on the S&P, and that would be near 6570. 6570 buyers. Would just look to take it up to maybe a pre-market recent high, or even the other pre-market high we have over here at 6647. So 65.70 for entry, 65.22, 66.47 for possible price targets. And vice versa, guys, because we're range bound, let's say we move higher from here. If we start seeing some selling pressure after we sweep a recent internal high, we're going to look to play that to the downside. Our market is still telling us day trading and swing trading is still more slightly bearish. We know and we see why, so we want to execute accordingly.
Yeah.
Awesome. Nil, you got anything to leave us off on?
No, that's it, man. Lots coming. Stay tuned. We're releasing a few things today, and the future is very optimistic and bright. And I'm very excited for us, myself, and just every trader in the industry who's benefiting from what we built.
Dude, it's amazing. It's game changing. It's revolutionary, and we're just going to impact more people along the way.
That's it.
That's it, guys. Beautiful, man. Guys, Market in the Morning for you. Round of applause to us, to you, to everybody. It's a team effort. Take care, everybody. Have a great rest of your day and trade carefully.
Take care.